As a business owner, are you unknowingly throwing away $3,000 every year on unnecessary banking fees? I've seen firsthand how the banking system can bleed startups dry. I once advised a tech startup that almost missed payroll because their account was frozen by a traditional bank. That's when I realized how critical a strategic banking approach is. In this video, I'll reveal how the current banking system often poses unexpected challenges for entrepreneurs. Challenges that, unintentionally, may seem rigged against your success. I'll share the specific steps you need to take to navigate these obstacles effectively. These are the strategies I've used to help business owners save thousands in banking costs while maximizing their financial efficiency. Have you ever wondered why so many entrepreneurs struggle to get their business accounts approved? The system isn't intentionally designed against your success. That's the harsh reality many business owners face when they begin their banking journey. Traditional banks operate with outdated frameworks that essentially treat your new business like a suspicious entity, regardless of how stellar your personal banking history might be. Imagine this: a young entrepreneur pours their heart and soul into launching an e-commerce store. They finally get their first sale, but their account gets frozen with no warning, as happened to a client of mine, and I had to tell him that as a risk advisor, he needs to have a contingency fund separate from your operational accounts. Many entrepreneurs approach their personal bank first, assuming years of good standing will give them an edge. This approach backfires spectacularly. They face rejection after exhausting paperwork and pointless meetings. I've seen clients spend over a month gathering documents, only to receive a cold rejection email with no explanation. The banking system can operate like a fortress designed to keep new businesses out, rather than welcome them in. The requirements create a frustrating catch-22 situation. Banks demand extensive business history documentation like 2 years of financial statements or tax returns. But this is impossible for new companies. It's like applying to a university that requires a degree from that same university before they'll admit you. Is it fair to demand business history from a brand new venture? Ethically, shouldn't banks be supporting innovation? Traditional banking institutions implement minimum balance requirements ranging from $5,000 to $25,000. This locks up capital during the critical startup phase. Picture having $15,000 sitting untouched when you desperately need to invest in inventory, marketing, or hiring your first employee. The fee structure is equally problematic. Monthly maintenance fees typically run between $15 to $50, and that's just the beginning. Transaction fees accumulate quickly. $50 for each deposit, $30 for each check, $25 for wire transfers. One business owner I worked with calculated they were paying nearly $1,800 annually in basic banking fees, draining vital startup resources. This can almost seem like a deliberate, even unethical way to profit. Even after opening an account, the challenges continue. Many entrepreneurs face sudden account freezes when their business activity doesn't match the bank's expected patterns. A client running an e-commerce business had his account frozen for 3 weeks because he received several large payments in succession. Despite this being a sign of business success, the bank considered it suspicious activity and locked his funds without warning. Banks rarely explain requirements up front. Business owners discover new problems after investing significant time in applications. You might submit all requested documents only to be told weeks later that they need 3 more forms you've never heard of. International transactions create additional complications. Traditional banks charge excessive fees for currency conversion, sometimes 3 to 5% above market rate, plus processing fees. They may also place holds on international transfers for up to 10 business days, creating cash flow problems for businesses with global clients or suppliers. As a risk advisor, I always recommend having a contingency fund separate from your operational accounts to protect you from sudden account closures and limitations. The banking industry simply hasn't kept pace with modern business operations. Their risk assessment models were designed for brick-and-mortar businesses with predictable cash flow, not today's digital entrepreneurs with fluctuating revenues from multiple channels and countries. Traditional banks are essential, but what do you think about the new online digital banking options? To protect your business from these sudden account closures and limitations, establish relationships with multiple banking providers from day one. Include at least one digital banking solution that specializes in business transactions. These newer platforms understand modern business operations and provide services tailored to entrepreneurs, rather than forcing you into outdated banking models. What if I told you that the most successful business owners use a completely different approach to banking than what most financial advisors recommend? I've developed a framework called the Banking Resilience Framework to help entrepreneurs navigate this complex landscape. It has 3 pillars: diversification, strategic sequencing, and proactive presentation. Those newer banking platforms I mentioned aren't just accessories to your financial setup. They're the foundation of a strategic approach that's helping entrepreneurs bypass the traditional banking roadblocks entirely. Creating a robust banking foundation starts with understanding which institutions actually welcome entrepreneur accounts. The truth is, many financial institutions have internal blacklists of business types they simply won't work with. This is especially true for online businesses, international companies, or anything they consider high risk, which can include everything from e-commerce to consulting services with international clients. Digital banking platforms have emerged specifically to fill this gap. Services like Wise Business, offering borderless accounts with local details for multiple currencies, Mercury, designed for startups with streamlined transfers, and AirWallex, specializing in multi-currency accounts with competitive rates, were built with modern entrepreneurs in mind. Always do your own research before making a decision. Unlike traditional banks, these platforms understand the global nature of today's businesses and offer approval rates approximately 3 to 4 times higher than traditional banks for new ventures. Instead of waiting weeks or months for account approval, you can often be up and running in just 2 to 3 business days. The documentation requirements with these platforms are typically much more reasonable. Rather than demanding years of business history that you simply don't have, they focus on verification of your identity and basic business registration documents. I've seen clients rejected by multiple traditional banks get approved with these digital platforms in days, allowing them to start processing payments almost immediately. Smart entrepreneurs don't just stop at one account, though. The most resilient business banking strategy involves maintaining at least 3 different banking relationships: a local traditional account for certain in-person banking needs, an international digital account for global transactions, and a dedicated payment processor for your revenue streams. As a famous saying goes, do not put all your eggs in one basket. So the Banking Resilience Framework, Pillar 1, diversification. Banks need to trust the steward of their funds. Your banking strategy should follow these key steps. Strategic sequencing, Pillar 2. Starting with digital platforms builds credibility. Think of it as earning your stripes before approaching the established players. Banks need to trust your business model. Start with digital platform. The documentation requirements with these platforms are typically much more reasonable. Proactive presentation, Pillar 3. A solid business plan shows you're serious and prepared. Banks need to understand your business model, and a well-prepared entrepreneur stands out from the crowd of applicants who walk in unprepared. Research each institution's specific documentation requirements before applying. This shows you're serious and not wasting their time. Begin with digital platforms to establish your business banking history. This increases your credibility when you approach traditional banks. This strategic sequencing approach can increase your approval odds at traditional banks. Beyond just getting approved, this multi-layered approach to banking offers significant cost savings. By using specialized services for different banking needs, you can reduce your overall banking expenses by up to 70% compared to relying on a single traditional bank. Digital platforms typically offer much more competitive rates for currency conversion and minimal fees for transactions that traditional banks charge heavily for. So there you have it. The banking system may seem to favor established businesses, but that doesn't mean you can't succeed. By approaching the problem strategically, what seems like a disadvantage can actually become your competitive edge. Think long-term. Instead of waiting for rejections, take action today by researching digital banking alternatives that cater to your business model and prepare documentation based on their specific requirements. Take action by making a checklist for documentation requirements. Download my free Banking Resilience Checklist to start optimizing your finances today. Working with hundreds of entrepreneurs has taught me that banking success comes from building diverse relationships that grow with your business. This approach protects you from account freezes while giving you access to better rates for different aspects of your operation. I am passionate about helping entrepreneurs succeed. What are your current banking challenges? Share them in the comments, and I'll do my best to answer them. Are you ready to transform banking challenges into your competitive advantage by creating a strategy that works for you, not against you? Remember, managing your finances with integrity is not just good business. It's a reflection of your values,